Hi and welcome to the Market Alert for Tuesday, the 13th of April 2021. So futures, global stocks are at all-time highs as the Q1 earnings begin. So we've got low inflation and a dovish central bank should limit the rise in bond yields during the recovery. So what we're saying here is that the stock market's got more to the upside based on the Q1 earnings that are starting to be fed through later this week. And that's going to put some pressure on the bonds, keep them, or the yield, keep it limited. As it says here, Q1 will blow out expectations. Then what? Well, yeah, it'll be interesting because obviously, as I said in yesterday's Market Alert, you've got the easing of restrictions as globally, and of course this is going to have a huge impact as some sense of normality, and I use that in inverted commas. For a while, and this can have an impact on earnings, but it's absolutely true here. Then this is the question. Then what happens after we've had this spike and all of the stimulations gone, etc. Markets continue on their path of record disconnects from reality, as with any bubble, valuation metrics are disregarded and new narratives spring up to justify the price action, and previous metrics are discarded as irrelevant. Yeah, absolutely. What's the new story to keep the market on the highs? I think this is the wrong way round, actually. I think this should have been the headline. How long can markets party like there is no tomorrow? As we see here, the great transition to monetary hopes to fiscal reality. And the reality is that someone's got to pay the butcher. But yeah, I mean, this is a great headline here. How long can the markets party on like there is no tomorrow? Especially when you have a look at the charts, which we'll do in just a moment. So the implied volatility, we can see we've had these lows over the last few weeks. Yesterday the market, however, just moving up slightly, nothing to shout about. But it'd be great if we could get down a bit lower on these figures, down to the 10 level. Maybe that's possible with the earnings coming out and the market being pumped to the upside, who knows. But they certainly want to keep the yield in check, as it said in the headline. We're back to 1.69 there, which has seen a bit of a move up there. So just have a look at the 5-day. Should see a bit of change in trend. Yeah. So again, we're heading back to that sort of 1.7 level there for the yield. So keep an eye on that one today. But yeah, certainly need to keep this under control if we want to move the markets higher. News today, which is unusual. We do have some news for a Tuesday. 1:30, we've got the CPI and core CPI for the US, and then there's just a bond auction at 6 p.m. This evening. So let's have a look at the Dow, see where we are with this. You can see that we were up on Friday yesterday. We have some potential weakness, and we've got some selling pressure in the market here with the bar for yesterday and what I would call a telegraph pole. You can see it looks like a telegraph pole, but we've certainly got selling pressure contained within this as well. We need to take out the new all-time high that we see here if prices are to move higher. If not, we have a set of fibs to the downside, including the 5-bar moving average, but looking a bit weakish there. Overnight, let's have a look at the 5-minute. The weakness coming in the last hour there, but the market finding support at the DP level, but not at the 200 MA at the moment. And moving on to the DAX, a bit of a different picture here. We've still got this sideways move, but also we've got some selling pressure for yesterday as well. You can see prices are just sitting above the 5-bar moving average for yesterday, or closing above there, but overnight again bit of weakness there. Prices starting to move back to the downside, so we'll see what happens when the futures market opens. But overnight again you can see that we were hugging the 200 MA and the DP and the close. You can see market range bound there, just breaking a little bit higher, but at the moment everything's changed in the last hour there, where you've got prices breaking through. Well, we came through the 200 to begin with, and now we've gone through the DP level. You can see the increase in selling there, but finding support as well. You can see cluster of volume bars there as well. So it's important, if the market's to move higher, back to the high to close back above the DP and the 200 MA. If not, we're going to go down and have a look at the low. And if we look at that in the futures market, then we want to see prices find support at this level. Meanwhile, in the metals, well, good old Morgan Stanley & Co. yesterday, or JP Morgan, I should say, not Morgan Stanley, managed to send the market down to 24.67, 50 cents lower through the 200 MA, and get ready for more of this. We're going to go back and retest, aren't we? They look determined to do this, but according to news sources yesterday, it took a lot more selling to get through this area, but even so, it doesn't matter now, it's done. And that leaves the market free to trade down to the 89 and there you go, the 89 and the $24 area once more that we saw a few weeks ago, if it wishes to do so. And it's looking weak at the moment. You can see, just as I'm recording, they've just slammed it down again, as there is a sort of lack of trading at the moment. Bit of support overnight, you can see there at on the Asian market, down to the previous day's low. Again, how important it is to have the previous day's low in your price charts as an area to catch a quick trade, not necessarily in silver, but in currencies and stocks, and also the indices. Not so much in these sort of markets. Good opportunity once you've got a shakeout in the daily chart. We get back down to these sort of levels, then like I did before when I bought at 24, which I still have on the table. Just bring this up here. There you can see it when we got down to this level here. I've moved the stop just to lock in and try and look in at some profits. I suppose in reality I should have taken the profits as it underneath the 200 MA, but just in case we find support at the 50.62 area, then and we start to move back to the upside, then I've still got the original position there as well. So it's a very difficult one. I'll take a view accordingly. I'm not too concerned because I have many other positions in this market down at the $13 level, so I'm not overly concerned about any pullbacks, to be honest with you. If they want to have a shakeout, then that's fine, not a problem, and I'll just buy back in again. Eventually it will do what it did last year, move around and move back to the upside. So we could see a shakeout before we get the sort of the annual rise in the precious metals as well during the summer. Okay, let's have a quick look at the dollar, which obviously is moving up, which is why the precious metals are moving down. You can see this yesterday, the market finding support at 62 and also moving up again there now. Interestingly enough, the dollar actually came back down and closed on the low, but up at the moment. Hopefully the 200 MA will stop this and the 20 bar moving average as well, just to and then see the prices reverse. Bit of a dead cat bounce going on in the dollar at the moment. And in gold, of course, suffering the same pullback situation as well, which you would expect. The fibs are all drawn in there for where it's likely to come back to. It just depends whether they decide to slam it all the way down to 89 or to the 1676 level there. Okay, quick look at yesterday's action, and we can see in the pre-market that they bought the market straight off the S1 in the futures market when it opened at 7 a.m. straight up to the DP level there. So again, no surprise really. And then through the DP we went until the cash market opened, and then we saw the battle start there. We got 2 bars of selling down to the DP. We had a third, which is interesting bar actually, because the volume in this is 90% of the previous bar and volume, and then sitting at the DP level as well, and the 62% retracement from this swing here to the high that was left behind. The market found support at the DP. We then had a potential buy signal which was filled. We had to get through that high, which we did, and then the market started to run into difficulty as you see the volume building there. You can see it already the same as the previous bar by the time it's completed, and it's a case of let's get out of the trade. We're stuck at the high. We can see that there is resistance there. The volume proved this, and now we see prices trade all the way back down to the DP. And I'm going to fast forward here because absolutely nothing happened after this. There were some nuances in there, which I'm not going to labour the points at this time, because you can see that we're stuck in this sideways range. Eventually the market, again, 200 MA, the DP level, finding support there, and the market just stuck in that range. And more or less through the morning as well, we came back to the close. We have a look at, just go back just to the morning session there, and you see the high and close there, the market trading up to this, as you'll see here. And then in the afternoon, well, again, the market sideways. Now, just because it's sideways, there may not be much as far as intraday or scalping or day trading is concerned. But the interesting thing here is that you end up with a situation where they can be holding the market on the highs while traders actually get out. And you can see a bit of this here where prices are ramped up and then they're bought back. And this is what's known as a distribution of the market. So the market makers will hold the market at certain points and then offload. And this is, of course, in individual stocks, not in the indices, but then that's reflected in the indices. And this is why you can end up with this sort of churning. I'm just going to go forward here. You see a bit of weakness there, and then the market being brought back again. And if we just go back to the DAX in the daily chart, you'll see what I mean. You've got this selling pressure there. You've got the narrower range with some pressure there, because if it was all buying volume, it would have moved the market to the upside. But there's obviously something that's putting pressure on the market at this level. So, and the same in the Dow as well, which you can see there. So it's measuring the rate of change in prices for the tick volume in these charts. But when you actually see this in individual shares, and it can go on for several weeks where it trades sideways, and the volume is greater than it's been for a long time, and it gives the clue away that there is selling by the pros while they hold the market on the highs. So there we go. Let's just have another quick look at what's going on. If I can find the chart. There we go. Let's just have a look at the 2 minute. So we're trying to bring the market back at the moment at the DP level there. So it looks like at the moment we're 15 minutes away from the futures opening. I'd expect the market to have a bit of a move to the upside based on what we're looking at there at the moment. We've got some buying there and some there, but the spread on ETX is too rich for the futures market's 4 point move. 4 point spread. So I won't be. I don't trade the futures market, but so that's what it's looking like at the moment, given where the DP is and the 200 MA. They're going to attempt to try and keep it above this. If not, they'll shake out to the low, which is just down here, which you can see. Okay, that will do it for this one. As ever, thanks for watching. See you in the next.